stuff ready. So you'll hear exactly what I hear on this one. I've got a lot. I've got notes, and I was going to do it on Monday, but then I think Monday's just too late. Good morning, by the way, to YouTube. I am live on Substack as well, on my phone. I still haven't, let's be honest. I have not been able to technically figure out how to do Substack and YouTube at the same time. So I just figured, why not? Why not go live on both? I typically won't do both, you know. I was gonna go just, you know, do a little bit update on Substack, but then I figured I wanted to show charts. So I'll record it and I'll post a newsletter. I won't post this live. The live will not be posted, but the actual podcast and the newsletter will be posted. And it will not be behind a paywall. Just so everyone's aware, it will not be behind a paywall. Let me just make sure. We're going to go over here. Let me make sure this is working. No, it's not. So I've got to... I didn't make sure that this was working. Properties. We're going to go over here. I'm a mess this morning. Voila! Okay, there we go. And it's a mess. Yeah. Well, and part of the thing about doing it Monday, I made quite a bit of changes to my portfolio yesterday. And the entire show is about my portfolio. The entire podcast was started, and it continues to be my morning session. The problem is I'm not able to effectually trade. Morning, Chris. And I'm not, you know, and by the way, if you want to come up live on Substack, the stage as well, once I'm done recording the podcast, hang around and I'll invite some subscribers up if you want to chat. But the podcast is mostly about, okay, this is the process that I go through in the morning to look at stuff. Do I want to make moves? Do I want to do something? It's evolved into talking to an audience. But during this time yesterday, I took it and I went through some kind of mental exercise, and I said, okay, where do I feel comfortable? And I didn't feel comfortable in a lot of stuff. So, yeah, in fact, you know what? We're going to, I'm going to take Dell out of the core portfolio as well. And Dell out of the core portfolio. Okay. That's, I sold out of it. So I'm going to take it out. I just don't have a lot of confidence that Dell is going to lead the crowd, in that one. Morning, Butch. So I just figured I'd kind of mess with that one. Okay. Let's see. We're going to go to the Qs here. I'm going to open up some of the links that I have. So the first one is if NVIDIA doesn't hold a volume shelf, it's game over. And I'm showing this, by the way, on my YouTube screen, not on the Substack screen. Kramer has been, and I can't believe I'm saying this, he has been more right than wrong on this particular thing. So whether you have Substack with Catalyst Watch, which I think is the best, the best option. I have a couple of burner accounts. With the Catalyst Watch, I think is the best. It's way better than Kramer. But again, you know, you just want to do this. Now, Fear and Greed Index, we'll look at it. I just posted something on Substack. Do not expect a bounce. This is great. One of the things. And I've got a couple of clips for you from past interviews with some of the greats. Buffett Peter Lynch talking about how to take advantage of stock market corrections. I've posted this one before. This is one with Josh Brown. Josh Brown says, if you haven't traded in a market like this, it's not a time to learn. It just isn't. Warren Buffett had to come out with a press release yesterday, and we'll talk about that one. And just understand that the Trump administration, hey, Ed, they came out with a, I mean, they spent weeks figuring out reciprocal tariffs for each country. And then they just last minute come up with this damn thing. Trump personally selected that formula. And it goes back to what he said. So we'll kind of go over this. We'll kind of look. And I cut it, Chris. I just said, you know what? I'm done with it. The reason, and we'll go over the reason I cut Dell. It might be worth dollar cost averaging, but I figured let me take the cash, take the dollar cost, the tax loss, because it's not in a retirement account. So if I were dollar cost averaging, I might do that. But I don't know. I mean, you know, I'll if I want to get back into it, I'll get back into it in 30 days. But with their profit, their gross margins being an issue, I just thought it was important. So, okay, I may put over some somber music instead of the daily stock pick thing. We may have like CNBC. Okay, let me record this. Good morning. It is Saturday, April 5th. April 5th. It's a special version. I know I said I was going back to 5 days a week on this podcast, but we're going to do a 6, and I'm not putting this behind a paywall. It's a weekend update. I will probably take the chipper, sit it and don't listen to sign up for the newsletter, and maybe like CNBC does the thing. Hold on one second. Penny, stop. There's shit going on over here. But again, I may put some somber music on because it's not a time to celebrate. We're going to go over a lot. I got a couple of clips to make you feel a little bit better. I got some suggestions on what I'm doing. I've got some things just to think over. So let's start out by looking at the chart. Okay, take emotion out of this and just look at a chart. Go and look at a weekly. Last week was an enormous 8.5% downside candle. That's big. I mean, that's no joke. That's big. We're talking a major event at 8.5% down. You broke this trend line. I mean, you literally just broke that trend line. So this trend line means nothing anymore. Okay, we can keep it in. I'll keep it in there just because I do think that you get back to that. But your RSI on a weekly on the QQQ is at 28. And this is just a chart. I mean, you can pull up SPY, you can pull up VOO, you can pull up whatever you want, whichever index you track. It's bad. It's not good. And it's self-inflicted. Let's go over this. Because they spent weeks, and the news is coming out. With internal kind of leaks per se, and it's been tight so far. They have stayed on message, but the leaks are slowly coming out. Trump's team spent weeks calculating true reciprocal tariffs. And yes, I am in agreement that reciprocal tariffs were good. The market was too. Because remember, when Trump came out, the market went up by 1% when he announced reciprocal tariffs. When did the market go down? When he pulled out the fucking big board that had these just erroneous numbers. And inside the administration, after weeks of work with aides from several government agencies, produced a menu of options meant to account for a wide range of trading practices, according to 3 people familiar with the matter. Instead, Trump personally selected a formula that was based on 2 simple variables: the trade deficit with each country, not tariffs, trade deficit, and total value of its U.S. exports. Okay? So it's not reciprocal tariffs. Get that out of your mind. One of 2 things. Either Trump wanted to say tariffs because people know tariffs and people don't know trade deficits. And trade deficits are sometimes good. Countries don't always produce what we produce. So, the importing more to a country is good. But sometimes they produce things that we don't produce. Do you want a $3,000 iPhone? Because that's what you'll get if it's produced in this country. Do you want $60 slippers? Because that's what you'll get if it's produced in this country. So sometimes things are made in other places that are better. It's just better. But again, I am for reciprocal tariffs. Okay? You've got the administration going on news stations saying that we took care of over in January, and they're saying that the economy was in a depression, that inflation was still out of control. And then they went so far as to lie that Warren Buffett supported this initiative. Warren Buffett had to come out with a special press release. Okay? He had to come out with a special press release. I repeat that. Warren Buffett, who's in his 90s, is just sitting back in his chair enjoying life. He had to come out with a press release. Okay? So be careful what you're hearing, what you're listening. Make sure that it's true, because there's a lot of misinformation out here. Clearly misinformation meant to spin a narrative. And Warren Buffett just wanted to put it straight. I don't support this. So, speaking of Buffett, remember, he bought a ton of Oxy. Okay, let's look at Occidental Petroleum. Remember, he did sell out, but he still invested in this, okay? He bought Occidental Petroleum up here, and it's been upper left to bottom right. And now with the weakness in the economy, oil has just tanked. So, again, he's not perfect, but he did see something in the economy which made him make a move. Okay? Many pro-Trump influencers are commenting about how dumb this is. So one of 2 things is going to happen. Again, his base seems to be turning on him a little bit. And even, we may see some weekend news shows where Republicans actually come out. So I think you're going to see one of 2 things. You're going to either see this come off quickly, which, again, I don't expect. The CNN Fear and Greed Index, I posted this on Substack this morning. It's currently at 10. In the first administration, it went to 0. It went to 0. So if he holds to this, don't expect it to get rolled back very quickly. But number 2 that I expect, and I think this one will absolutely come true, someone other than Trump will get the plane. And to number 2, he's already started it. Because what did he do yesterday with Jerome Powell? He said, hey, it'd be good for you to lower rates. So he's already started the blame game of he's going to blame this drop on Jerome Powell not lowering rates. Totally untrue. Totally untrue. Okay, my friend that works at Fidelity said these were the 2 biggest selling days in the history of Fidelity, setting a record for the number of trades placed within just 1 hour. I'm not sure that made the news. But there's also some other stuff that's coming out from other brokerage houses that people were buying on Thursday and then they were selling on Friday. So be careful. And I wanted to point this out. I am selling. And so I was a big seller I was a big seller Thursday and Friday. I am in a different realm of life than most people that I talk to. I see some of the demographics on this, but I am in the upper, and this isn't a humble brag. This isn't anything about that. Just understand, when you hear me selling, I said it yesterday. Some of you may be richer than I am. Some of you may be poorer than I am. Some may have families. Some may be closer to retirement. Some may have IRAs and no brokerage account. Some may be trading on margin. The point is, at this time, it's very individual about what to do and having a plan. I always talk about having a plan. I always talk about avoiding panic selling. That's not what happened to me yesterday. I said it a ton. My brokerage account is now 40% cash. I will deploy that money, and I have put it out there. I started tax loss harvesting. So I got rid of some of my losers, and I will write those off. And I very well may get back into those. Like Credo, I love Credo. Broadcom, I love Broadcom. I will get back into those. Broadcom, I sold because I made some profit on it. And I said it before. I had a plan. I wanted long-term capital gains. Now, was that the right move? Absolutely not. I would have been better off paying the 20% or 30, 25% short-term capital gains, whatever it turns out to be, way up here in the 200s. Instead, I sold in the 140s. But I still made a profit. And you can see on the weekly, I put it on the weekly chart right here. I sold out. I sold out. Even though I believe I bought some August 4th, I sold out. I had an overall profit. Some of it short, most of it long. But I'm not willing to let it go down. And so my point about this is I am in a different situation. I told everybody, trading a $1 million portfolio, I have white knuckled that many times in my past. Okay? I am in a different situation now. It is a different portfolio for me now. That number scares the shit out of me when I lose that amount of money. Okay? I was looking at the amount of money. If I'm down $300,000, if I'm down $400,000, it doesn't bother me. The dollar amounts I'm down over the last couple of days, it bothers me. So my point is, don't listen to a douche on the internet. Many of you may not have been through things like this. I have. Okay? It doesn't scare me. I'm not scared right now because I have a plan. That's the issue. I'm only 15% cash in my brokerage account. I'm sorry, in my retirement account. I'm 40% in my brokerage because I'm able to take advantage of tax loss harvesting. I haven't pulled out of my retirement account. I did sell some stocks that I had some bets on, but that's largely invested in long-term buy and hold. My brokerage account, I trade that a lot. In fact, my brokerage account, I traded Apple yesterday. Okay? I traded Apple. Now, when you look at a weekly chart on this, I sold Apple at $199. I have sold Apple at $260. I think it was $257 in December. I sold it at $240. I sold it at $220. And now I sold it just under $200. I think I got out of it at about $195. So I've sold it on the way down. Will I get back in? Probably. But I haven't seen an opportunity to get back into Apple. It's expensive. Okay? I want you to listen to a couple of clips, and I'm going to put these in the newsletter. The first off is Josh Brown, and this was taped Monday. He goes over how his Ritz-Holt management has changed direction. And it's not about, long-term buy and hold. He's still in that, but the reality is they put in some protection. But he makes the great point. If you haven't been through a market like this before, this isn't a time to learn. So don't go thinking you can sell out your portfolio and time the bottom. Sometimes you have to just sit in it and wait. Again, it depends on your risk factors and your risk tolerance. Peter Lynch explains how to take advantage of market corrections. We are in a market correction, and there is one person who can get us out of this market correction. Okay? But I don't want you selling unless you're losing sleep. If you're losing sleep, your portfolio isn't balanced correctly. So what you need to do is rebalance. But don't think you're going to sell out of this and then buy back in and time things. Because timing things, it's long overdue. And the reason it's long overdue, understand, the weekly or the monthly chart, okay? You can take a look at the weekly chart. When should you have been getting out and starting to sell? When you lost confirmation. Okay? That's the time when you start to get out, when you start to trim a little bit of your gainers. It's why I sold Apple at 240. It's why I sold Apple at 220. Okay? But I wasn't selling out of the position. I have a plan. I will buy back in. Maybe I'll buy back in at 250. But I'll buy back in when it's in an upward trend. But I also didn't get out. And that's what Peter Lynch says. And what Warren Buffett says is they all say, hey, things just went on sale. So pick your favorite stocks. Okay. Find out what their PE is. Find out what the fundamentals are. Go and look at a chart and say, oh, in a good market, the stock will trade here. In a bad market, the stock will trade here. Go back, if your charting program allows you, go back and look at 2022, okay? Because I put this in here, and I've had this on my weekly chart for a very long time, and I've said this before. We're trading right now at 422. Where might we go back? We might go back to this 406. It's only 5% away. You're only 5% away from that. That is the 2021 highs. Many, many stocks have gone back to their 2021 highs, wiping out 4 years of gains. Okay? Is that horrible? Yes. Is it bad if you didn't take advantage of it and you bought in 2021 and you were positive during this entire time? I'd argue yes. Yes, I am the guy who bought Apple in 2004 and just held and did it. It was a different portfolio. And I still don't mind holding Apple. I still think Apple's a good one. But at some point in time, you have to take profits. And this may be a time where you take profits and you move around to a different area. Okay, this is a great clip as well. Me, after I make $6 after buying random stocks that got put on Wall Street bets back in 2020. It's a great clip. It's funny as fuck. So, again, fear and greed index, don't expect an immediate bounce back up. Because I don't think fear and greed actually affects a man who goes to the golf course yesterday and goes and has a fundraiser at night. So, take a look at next week. This is the catalyst watch. Tariff drama, big banks report earnings, Walmart meeting, and the CPI print. We will get inflation. Jerome Powell came out and said, hey, we're still data dependent. Trump is going to blame him. Just understand. And if you don't have Seeking Alpha Premium, just go and watch this video with Jim Cramer. It's 11 minutes long. I mean, I know, listen, rule number 2 of this podcast is don't listen to Jim Cramer. Jim Cramer has been more right than wrong for a few weeks right now. I don't think he's great at individual stocks. I mean, you can Google Bear Stearns. You can look at him crying about Meta. You can tell him, I wouldn't, look at him at 20 saying, I wouldn't own Palantir. You can look at him at 20,000 saying Bitcoin's a scam. You should get out of it. But he's very good at macro, and he's very good about understanding when one company says something, what it will do to the other companies in that sector. He's good at that. He's just not great at stock picking. And he'll block you if you tell him, on Twitter, that he doesn't beat the S&P. And I know this from fact. So just understand what's going on next week. So let's take a look at some of the core portfolio stocks, okay? Remember, you want to find quality stocks that have great products, that have good products and great management. Then you're buying them on sale because there is not one company. If you bought CVS at the beginning of the year, that's not a great company. That is a company that's rebounding. Okay? So let's look at some of the stocks. Apple. These are in the core portfolio. Apple. Is it a great stock? Yes. Yes. Is it expensive? Absolutely. Has it just broken down from this range? Yep. Expect 200 to be a resistance level again. Why? It's expensive. Okay? Look at the valuation. It's an F. The growth is a D. This is what Dan Niles told me on Thursday when I was on Spaces with him, when he mocked me about holding Apple. I mean, the forward earnings, or even, the PE has come down. Is it a relatable now? No, because 25 is tough when you have 2% revenue growth year over year. It's tough. Is it better to buy it today at 188 than it was a few weeks ago at 260? Absolutely. They haven't grown revenue. It's trading at a high multiple, and that may need to still come down. But with stock buybacks and a potential iPhone cycle, upgrade cycle, I think it's a good one. Find an entry. Maybe it's the 4-hour algorithm. Because right now, remember the 4-hour algorithm just a few weeks ago wasn't beating buy and hold. Today, it's beating buy and hold. Over the last 2 years, 30 positions, you make 31% versus buy and hold is 22%. Find an entry in the 4-hour algorithm, something. The 4-hour algorithm was built around COVID. Me and my friend Steve, we didn't want to lose 40%. We built it around COVID. And see, Thursday, it told me to get out at 206. I waited until 195. Is that a big deal? Maybe. If you're selling 1,000 shares of that and it's $5 per share, it's $5,000. It's not that big of a deal to me. Because if you got 1,000 shares, it means you're selling $18,000 worth of stock. But again, just understand. I have a ton of, tens of thousands of shares of Apple. So it makes a difference to me, but I'm selling it at an average purchase price of like $2. Amazon, is this a great one? If they continue to innovate, yes, they just put out a shopping agent that will go and shop for you. It's great. Look at Amazon's personal assistant, Alexa, versus the assistant that's on your iPhone. So if cloud continues to grow and consumers are strong, maybe this is a good one. But in a recession, if we are going into one, no, it's still expensive in a recession. But do you want a position? If you don't have a position in this, it makes sense. 26 times forward earning. You haven't gotten this kind of ability to buy it at this price for a long time. Let's go back and see where it was in 2021 during the high. It was at 189. You're trading at 170. Microsoft, they just passed 50 years and they had their 50-year celebration. The 4-hour algorithm makes you 26%. Buying and holding makes you 33%. Find an entry on this one. Where was it trading in 2021? 344. You're at 359 right now. And they have a far better company than they did back then. They just blew away. On the iPhone, you can download Copilot, and it's fantastic. Versus Siri, which is the iPhone assistant, which sucks. Is Google a great buy? Well, if they can continue to kill it on search and AI, yes. But again, the consumer needs to be strong. So in a recession, what happens? People start pulling back on their advertising. And you can see 2021 highs, 151. This was when interest rates were at 2%. It will get back here. But the consumer needs to be strong. Nobody knows how long this is going to last. There's one person in the world who knows how long this will last, and he's playing golf. Let's look at Meta, because Meta, open source AI, fantastic. Eyeballs, unbelievable. TikTok ban, yep, you bet. Where was it trading in 2021 at the peak? 381. Where are you trading today? 500. If you can get this under 500, it's a different business than it was back then. If the consumer, when the consumer starts to be strong and eyeballs go back to Meta and advertisers, the only place that you can effectively advertise today is on their platform. WhatsApp, Instagram. You know, again, it's a better company today than it was. So you're getting these things on sale. Now, NVIDIA broke 100. And Dan Niles put it perfectly. Okay, this one may get hurt. And I didn't sell out, but I absolutely trimmed at 95. But you know what? I made 200% gain on those shares that I sold, because back here when it was at 40, I was loading up. So those were 100%. Back here, when it was, in 2022, when it was at 13, I didn't load up, but I had some shares. So I trimmed those. Do I care that it's now down at 94? Absolutely I care. And look at 2024. Before it dropped, that's a support level. So I said, you know what? I'm going to trim. And here, Trendspider posted it. If NVIDIA doesn't hold this volume shelf, it might be game over, because that goes down to 45. And here's what you have coming up in this earnings season, okay? You've got a bunch of companies, and Satya Nadella in the 50th anniversary yesterday said, we are growth dependent on our spending. So what's he going to do? He very well may pull back on capital spending, because if we go into a recession and we're not growing, he ain't going to spend $80 billion or $800 billion, whatever it was. He's not going to spend it, which means NVIDIA may not get the purchases that they're supposed to. They may pull out of them. The hyperscalers might start buying. But here's the thing. When capital spending starts picking up and the models need inference, remember, just go and Google inference with AI. Go to Perplexity, ask about it. We are not in an inference stage, but their new chips, it's all based on inference. And so these hyperscalers are going to have to rebuild the data centers that they have today with Blackwell, with Rubrik. And it's inference. And that's what's going to change the game. And NVIDIA is the leader in that. So as we start getting back, again, sentiment is a hard thing to turn around. You can't have a week like we just had on the Qs, and just all of a sudden he comes out and said, ha ha, like the Simpsons, or like, what was it? Peppermint Patty pulls the football away from Charlie Brown in the Peanuts. You can't have that. It won't turn around super quickly. Market, they trade on confidence. Right now, the market has no confidence. Am I afraid that it's going to go lower? No. There will still be some stocks that are good, because you know what? Rocket Mortgage. Josh Brown called this one. He bought it, look at the week before, up 5%. Look at last week, it's up 3%. This is one with lowering of interest rates. Guess what's going to boom? Refinancing. And you can see this one just hanging above that 200-day. Now it's above its 50-day. And you've got a positive movement. Okay, if that 200-day starts to take off on the weekly, you're not oversold. You're not overbought. Look at the highs back here at 22. You're trading at 15. So during the peak, when this one IPO'd, I expected to get back there. Genius move. Should have known about it a week ago. Because we know, I put in the newsletter yesterday, 3 things. Let's go to the newsletter. I put in 3 things that that I was assuming was going to happen. Oh, it's showing me I'm live. But 3 things. My take. Here's what I'm seeing. I want cash to take advantage of the recovery. Earnings season is coming up. I can't imagine any CEO in their right mind gives a rosy outlook. They will give no outlook, or they will give a bad outlook, but they will not give a rosy outlook. Tariffs. The war has started. China retaliated. France retaliated. Germany retaliated. Japan, Korea, they're negotiating directly with China. You know how bad shit has to be for that to happen? The Fed meeting. A rate reduction is already priced into the market. As low as we are, you've got a rate reduction priced in. If inflation comes out and it's fine, imagine if they don't cut. I can't imagine what happens if they don't cut. If I find something that pays me 4 to 8%, like FFRHX or JAAA, or even FZDXX, which is my bond fund that all my cash is held in, which pays an interest of 4.1%, I'm okay with this if we see some volatility at 40% cash. Because I can buy back in. I want to buy back in when the stock looks like this, an upward trend. Just draw a trend line. Let's go over to QQQ. We will look at a weekly. Where's your trend line going? You're still up. You're still up. But there's no viable up trend line because you have to touch 3 points. And when you anchor to here and you go back, where are you touching 3 points? I mean, let's just anchor to there. Where are you touching 3 points? If this is the actual bottom, where are you touching 3 points? You're touching 3 points right there. So for long term, you're going to be okay. But who knows? You can't anchor to the current candle. You have to anchor to past candles. And right now, I don't see an up. I see sideways. But I don't see an up that touches this candle's bottom other than super, super long term. So know your time frame. Now, if we go over to Linktree and I go down to Savvy Trader, okay, I'm going to do this live for you. This is the core portfolio, 34 names. It's about to become 33. And the reason is I sold out of Dell. So let's just sort by symbol here. Let's go down to D right there. And I'm going to sell it. It no longer deserves a place. Okay. The return, it's down 37% since I put it in here. When did I put it in? June of last year. It was up. Or I'm sorry, it was October of last year. I put it on the watch list in June. But it was October. I started buying this in June. I wound up selling this yesterday for a loss. I just don't see the benefit of having this one in there. There are margin pressures, and that's what's dragged the stock down before. And since they make their servers, since they make their computers outside the U.S., do you think that they have a plant already set up in the U.S. to make these? No. The margin pressure will continue to weigh on this one. Continue to weigh on the stock. No reason to keep it in this portfolio. And it's not a valuation thing. It's not anything other than just the margin pressure, because that's what's been holding the stock down. And then you get tariffs and higher cost. We're going to sell that. So the core portfolio is now 33 positions. That will sell on Monday. So there are others that should maybe come out, but you can see, again, this was created in 2023. There are now 1, 2, 3, 4, 5, 6, 7 stocks that are at a negative. Even XLK, by the way, is down 13% since I bought it. XLK, I bought this one way back in March of 2024, I guess. I can't believe it's taken me long to put this one. This was March of last year. And it's down 13%. So again, Find your comfort level, find your portfolio, go and do it. But I am doing my thing. I don't think you should follow me. I typically make a lot of mistakes, and you will too. Just feel comfortable with it. Don't be upset about it. Don't try and be perfect. You won't be. You know, like I said, Buffett bought Oxy, and he's getting held as a king because he sold SPY and VOO. But he bought Oxy, and he's down 50% on freaking Oxy. Billions of dollars. I mean, look at Oxy. If you go to look at the insider sales on Occidental Petroleum, and you just go down here, look at that. I mean, June of 2024, 31 million, 39 million, 82 million, 24 million. And that's at $60. Okay, in August, they sold a bunch. And then they started buying again. And they sold at 35. I mean, I think that was just trying to get some shares off the books or something. It wasn't trading at 35 in August. Unless it was. I don't know. But again, they sold a bunch, and they hold far more than they sold. And it's at a significantly higher price. So you will make mistakes. Everybody makes mistakes. Just make sure you have a comfort level. Because next week, the one thing that we're going to see is the VIX spike. I can almost guarantee you of this. Let's go to the chart. I mean, let's go to a 5-year chart of the VIX. I mean, if you were to put, we're going to take the S&P out of that. We don't care about the S&P. We're going to take this. Look at where it goes back. This is April of 2020. Oh, let's here select metrics. Let's select metrics. We're going to do performance. Let's see, valuation. We're going to do just price. There we go. We'll do just price. There you go. Right there, 45. That's COVID. I mean, let's go 10 years on this one. What's this one? 66, COVID. Where you at right now? 45. 45. I mean, again, you know, if you scroll back in here, 6 months. This was 12/24. Let's go 1 year, because that's going to get you the August. That was the Japan unwind. Okay? It was 60, I think. 60 at its height. It just doesn't show it on this chart because it tries not to do it daily. But again, historical prices, you can pull it up. You can see if we just the daily quotes, you can see where it's at. But again, it's going to spike. So find your comfort level. The VIX is key. I mean, I even told you about UVIXY. And here's the trade. Here's the trade. UVIXY, right now, if you took it on the 4-hour algorithm at 23, you're way up on this one. I mean, if you just looked at the 4-hour algorithm, that's coming off this 20% gain, which actually was like a 58% gain when tariffs were first announced. And then boom, oh, we're in a recovery. The VIX is coming down. Head fake, you're up 76%. 76% over just 7 days. Now, the opposite of this is SVIXY. So when we start to come down, this will spike back up. Have a strategy to play this one, because at 40, this can drop to 20 in a heartbeat. So have a strategy. And don't go balls deep trying to make back everything you lost in that type of trade, but just have a strategy. You know, put $20 on it. Try betting. It's sports betting. And that's what the way I play these kinds of things is, if I'm going to do it, I'm going to find a strategy. I'm going to see if it works. Right now, SVIXY hasn't worked. And you know why? Because volatility has been spiking. So there's the weekend thing. What did I do? 36 minutes. Okay. Have a great weekend. Remember, don't stress. Make sure you're sleeping well. I'll talk to you Monday. Bye. Woo, 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 woo. Oh, now I got to put it into iMovie. I want to get some somber music. Let's see. I need some copyright-free music. YouTube music library. There we go. Let's see. We're going to do Music. Mood. Dramatic. Apply. Let's say. That one's good. Oh, that one's good. This is it. That's it. We're going to download that one. Let's see. Do I need to attribute this one? I don't think I do. No attribute necessary, including videos that you monetize. Okay, let's see. View details. I think the audio from your library you may not make available to distribute or perform the music files from the library separately from videos and other content in which you have incorporated these music. Oh, standalone distribution isn't included, so I'll put it on Substack. We'll just download it. What the hell? So yeah. Let me look at your comments and then I'll throw it into. Okay, hold on. Morning, Josh. Hey, Meat Stick. Josh, so Alpha Pix portfolio, I've thought about it. I was contemplating selling it yesterday and taking it's in a brokerage account, so I could take the tax loss. But I don't want to do that just yet. I plan on looking at that this weekend. And then maybe taking the tax loss on some. I'll probably announce what I'm going to do next week. And maybe do it Monday morning prior to the show. So. Yeah, Meat Stick, it's kind of a different, it's a different game. Again, I'm not crying in my sleep. I'm perfectly fine. But I got nervous. It's different. Again, I can white knuckle a 50% loss on $1 million portfolio at $500,000. I'm not worried about that, Meat Stick. I've slept fine with that. But when you get to 10, 150, $1 million portfolio and you're white knuckling a 50% loss, that hurts. An 8% loss in a $100 million portfolio. That hurts. And I try not to look at the numbers. I try and look at the actual, the actual thing, but it hurts. And it's because I'm not an active trader anymore. And that's the problem is, I do the podcast and I'm not crying about this. I love doing the podcast and I get more out of the podcast than I do trading. But, days like yesterday, it's like, why the fuck am I on the air? Why am I not taking care of my portfolio instead of fucking doing a podcast? And so that's where I'm at, Meat Stick. That's kind of where I'm thinking. And I'm not losing sleep. I haven't lost sleep. I will be perfectly fine. A couple of my friends call me, do you have to go back to work? No, I don't have to go back to work. I'll never have to go back to work. This is my work. And Steven, I'm on YouTube sharing my screen. I can't share my screen on here. So I'd love to share my screen, but I can't. Substack, I have to figure out OBS. They gave me the opportunity to actually do it through OBS, but because it's only live on the phone. Oh, guess I can do it on my computer, but it looks funky on the phone or something. Yeah, Chris knows what I mean. It's just, it's different. You know, again, I retired in January of 2020 and I lost 40% of my portfolio. I mean, just look at, if you just look at QQQ, okay, we're going to go to a monthly. We're going to go to monthly because we're going to go back to COVID. I'm going to take this out, remove this, annotate. Oh, stop. We're going to take that out. This candle right here, I retired January 31st, 2020. What was February was down 6%. I traveled throughout February. I was fine. And then March came and you're down 8%. 8% was COVID. What's April so far? 9%. It's not nothing. It is not nothing. But I do believe that this is a COVID-like event. If the fucker gets off the golf course. And that's the problem I have. Is that, you know, is he on the golf course or is he doing something? And so when I see him playing golf, when I see him going to campaign dinners, when I see him, you know, not taking it seriously and saying, we just want to negotiate, and not saying, hey, this is the start of negotiations, and his entire administration was told to say no negotiations until they saw the market crashing, and then they said, oh, you can say negotiations. That's my problem. That's my issue. So, and Steven, by the way, I will post, I'm not going to post the live because the live is just me talking like this. But I will post the podcast on Substack. So I recorded it. Okay. Oh, Pavan, too much money in the IRA. I don't think too much. I mean, my parents did that. My parents are living. So my parents, the part of the issue with my parents that I've noticed is they put a ton of money away, and they didn't pay taxes, even though my anticipation through my lifetime has always been taxes are only going to go up. I didn't expect Trump to actually bring them down for a large portion. If the tax cuts are made permanent, then I think you still see them go up during my lifetime. So I'm not happy about paying taxes. I think taxes should be less. But the reality is, I think to fund the deficit that the government has, I think we're going to wind up paying more. So I optimize taxes as much as I can. I don't avoid taxes, but I optimize them. And so I have enough money in my brokerage account that my retirement account is just gravy. But remember, you also have mandatory distributions, and that's what kills you at 70. Is my parents have so much money in their retirement account, they're paying a shit ton in taxes now, whereas they probably could have optimized during their career and paid far less in a lower tax bracket because it grew so much and they didn't have Roths. They just didn't know. And it wasn't like they were uneducated about it. They just didn't know. They didn't trust advisors. They didn't go to advisors. They now do. I'm their advisor. So, yeah, affordable prices meet stick. If you're young, this is a great opportunity. Start getting in. If you're older, like me and Chris, and you have some gains, you start taking those gains. And you sit out for a little while. I want to see the market change. I mean, look at this monthly chart of Qs. The last time you crossed was January 2022. And there were reasons for this down. So the reasons for this was interest rates were going up. Now that interest rates may go down, he had a golden opportunity to just sit and wait till the data told Powell he didn't have to do this. The economy was fine. You know, go and do reciprocal. And I said it at the beginning. When he announced reciprocal tariffs in the Rose Garden, the market went up by 1% to 2%. It was up. The second he whipped out the fucking big board, it went down 4% and then continued down from there. So that's my problem. My problem is not reciprocal tariffs. It's A, the way it was rolled out, crappy and bad messaging. And then B, you're taking on allies and you're pushing our allies to go to China, to go and negotiate with China. It's part of the reason Merkel, and roll back to the time when Germany had to choose an energy supplier of natural gas. And Trump wanted to sell natural gas to Germany. And Merkel essentially said, fuck you, I trust Putin more than I trust Trump. And she literally set that agreement up. So the new administration that came in didn't necessarily want to, work with Putin on Nord Stream 2. But Merkel liked it. And then what happened? The new administration in Germany says, we're going to fuck with you and we're going to limit the natural gas and we're going to limit our energies. So, what does Putin do? He invades Ukraine. So, yeah, I mean, this is the Mag 7 to me is still a little bit overpriced. It depends on which ones you want. I mean, Tesla at 235, probably still a little bit expensive, to be honest with you. It's sitting around that 200 day. And Josh Brown said it yesterday as well. Nothing good happens under the 200 day. Nothing good. And so if you go to the daily on the Qs, nothing good happens under the 200 day. You couldn't reclaim it. Look at that daily. Rejected March 25th. Off the 200. You couldn't get it. And you still don't have a death cross on this one. So do I expect more downside? Absolutely, I expect more downside. So, but I'm gonna go and edit this together. I'm gonna put you guys out of here on the computer. If you're interested, go to Substack. I'm live on there. I will see you guys Monday.
Every morning I wake up to the sound of the trading.
I gotta take this song out. I gotta do a thumbnail too. Ooh, okay.
And fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell.